Hi, this is Gloria with Remax Direct, and today we're going to be reviewing tips to prepare you to buy your first home. So hang on! One of the first things you need to do when you begin the journey of purchasing your first home is reviewing your credit. So, how to improve your credit score to land a mortgage for your first home. Here are some tips. One of the first things you need to do is you need to check out your credit score, also called a FICO score. It's a simplified calculation of your history of paying back debts and making regular payments on your loans. If you're borrowing money to buy a home, lenders want to know you'll pay them back in a timely manner. And a credit score is an easy estimate of these odds. So, pull your credit score. To access these scores, you could go to annualcreditreport.com. You'll be able to get a free copy of your report every 12 months from every credit reporting company. They're not going to include your credit score, but you can ask your credit card company to offer free access to scores and reports. Once you've got that report, thoroughly review it page by page. Review the adverse account section that details late payments. Okay, see, here are some tips to improve your credit score for home buying. And see where you stand. The better your credit history, the higher your score, the better your opportunity for a home loan. The Federal Housing Administration requires a minimum credit score of 580 to permit a 3.5 down payment. And major lenders often require at least 620, if not more. So do what you can to make sure that your credit is in tip-top shape. Here's some other things you can do to improve the errors in your credit report. Start by sending a dispute letter to the Bureau, providing as much documentation as possible. Per the FTC guidelines, you'll also need to contact the organization that provided the bad intel, such as a bank or medical provider, and ask it to update the info with the Bureau. This may take a while and you may need documentation to make your case. But once the bad info is removed, you should see a bump in your score. If you've made a one-time mistake, call the company that registered the late payment and ask that it be removed from your credit. If you missed just a payment or two, most companies will tell the reporting division to remove this from your credit report. This won't work if you have a history of late payments, but accidents and small errors, it'll work for that. So it's a great way to be able to improve your credit score. You could also ask your credit card company to increase the limits you have on your credit cards. This will help to increase your credit. This improves your debt to credit ratio, which compares how much you owe to how much you can borrow. Once you've set your credit on a better path, it's time to tackle the next major hurdle, saving for a down payment. So step number 2, how are you going to save for a down payment and closing costs for a new home? Well, you're probably wondering, oh my gosh, what a daunting adventure to save enough money to be able to pay for all that. So here are some tips. One of the things you can do is you can replace that $250 monthly cable bill for a $20 Netflix streaming account. That's going to save you almost $3,000 a year. You could also cut that gym membership that you're never using and go outside and start walking and then running instead. Another thing you can do is start packing a lunch, and you will save up to $1,000 a year by bringing your own lunch. You can start a coin jar, saving all your loose change, and maybe save up a couple $100s. Another thing you can do is turn your thermostat about 3 degrees less. It'll help you save 10% off your electric bill, which brings in a couple $100 a year. And the other thing is curb your dinner and drinks out. So instead of going out 3 or 4 times a week, just do it once a week. That can save you up to $4,000 by just going out once a week. Plus, your splurge will be a little bit more appreciative if you're only doing it once a week instead of several times a week. So you can automate your savings as well if you're struggling to put enough money away because of the constant temptation to spend that paycheck. Automating your savings, you can do that through your employer. Ask your employer if you can have some of your paycheck deposited into a savings account. And that way you're automatically saving a certain amount of money every time you get paid. It makes it easy for you to be on the savings plan and not spending plan. You could also do that with your bank. You can ask your bank to save a certain amount of money for you as well. You can tap into your IRA. You can tap up to $10,000 for a home purchase on your IRA. While withdrawals from a traditional IRA will be taxed, the Roth IRA, if you've owned it for more than 5 years, won't be taxed at all as long as you're a first-time home buyer. Just be careful with this method though, as you will be denting your retirement funds. But combined with savings, this can quickly add to your growing nest egg. And check out my other video about tapping into your retirement account. You can also check out down payment assistance programs. The city or state that you live in, you may be eligible for one of these programs. Some offer up to $15,000 in the form of a grant or low interest loan. Most require your income be below the area median, but even if you make more, do your research. There are programs that provide funds for higher income households. You just need to check it out. If saving for a down payment is a challenge, it may be a surprise for you to know that you don't need a 20% down payment to be able to purchase your first-time home. If you have an FHA loan, all you need is 3.5% as a down payment. Once you have your down payment, it's time to start looking for a home. And to do that, you'll need to know exactly how much of a house you can afford. So number 3, how much of a house can you afford? Knowing you want to buy a house is one thing. Knowing how much of a mortgage payment you can handle is quite another thing. Too often times we imagine buying this gorgeous 4-bedroom when our qualifications are only allow us a 2-bedroom house. So how do you pinpoint a house where the monthly mortgage payment is financially within your reach and one that won't drive you deep into debt? The general rule of thumb is that you can purchase a home that costs 2 or 3 times your annual income. Once you know both the down payment you plan to contribute as well as your monthly income and debt, you can easily work out the maximum monthly mortgage payment you can afford. So, what I always tell people is you need to speak to a mortgage lender to be able to determine exactly how much of a home you can afford and what your monthly payments are. A lender will take a look at your income, your debt, your credit score, your credit report, and other factors of your financial past to determine how much money it's willing to loan you to buy a home. A mortgage pre-approval will tell you exactly how big your monthly mortgage payment can be, and this is also required when making any offer. In addition to the down payment and monthly mortgage payment, you'll also want to budget for some other costs. The big one is closing costs, which are fees related to processing your loan that can range anywhere from 2 to 6% of your home's price. Closing costs aren't paid monthly. Rather, they're due at closing before you can get your keys. So make sure you set enough money to cover these expenses. The mortgage lender will give you an estimate of what you qualify and what those payments will be. Once you have that pre-approval, you can start shopping for your home. So the next step is finding a real estate agent who will help you purchase your first home. So here's how a real estate agent can help you choose a first home. When you're interviewing an agent, you need to ask them a couple questions. You want to know how much experience they have. Are they seasoned? Do they know the area well? You need to also ask them if they're planning on going out of town anytime soon. So if they're going out of town, you want to make sure that they have some backup to cover them in case the perfect house comes along. If they're a solo agent, then you need to make sure to ask them if they're available to show you properties. Are they full-time? Are they part-time? It's better to work with somebody who is a full-time agent. You could work with somebody who's a solo agent. You can work with somebody who's a team. You just need to see who you're going to be working with, who's going to help you find the property, and make sure that whether it's a solo agent or a team, that they are available as soon as a new property comes to the market and they can show you what is out there. Because being able to access properties in this market is very important. Properties are gone within days. So you want to make sure that whoever you're going to be using is accessible and knowledgeable about what's going on in the market. Okay? So once you've found that special person, it's time to move on to the fun part. And that is shopping for your dream home. So here's some tips on how to make an offer for your first home. These are some quick tips. I have a whole video on some strategies as well. But right now, we're focusing on all the steps to becoming a first-time home buyer. So we want to make sure that at the end of the day, you have the keys to your new home. So here are some tips to get your offer accepted. Just because a home is listed at $300,000, it doesn't mean it's actually worth that much. It all depends on the market. If you're buying somewhere that's super hot, like it is right now in South Florida, especially where inventory is very low, like it is right now, probably writing an offer for a property that is below asking value is going to be a waste of time for everybody. So your best reality gauge are comparable sales of what similarly sized homes sold recently. Work with your real estate agent to determine a fair asking price. They'll have the best read on pricing and the marketplace dynamics, and they'll walk you through the comps with you. Your agent can help you to determine a fair price without offending a seller. While specific numbers are going to depend on the market, experts estimate it's unrealistic to go below 5% of the list price unless it's been sitting on the market for many months, which leads us to the issue of lowballing. Sometimes a home is priced just too high. No ins, ands, or buts. It's just priced too high. If it's been on the market for 6 months, then you may have some room to be able to lowball something like that and get it at a bargain price. However, this is a tool to be deployed rarely and with great care, especially if the current owners have lived here for many years. Longtime owners usually have pride in their home and they want the new owner to love it the way they do. So buyers who lowball run a risk of angering the seller and losing the house. Ideally, you're looking for a closing where both sides feel like they've got a fair deal. So don't lowball unless both you and your realtor agree that it's the best strategy for the occasion. If the market's tight and you've decided that you must have that stunning home, you can boost your chances by writing a personal letter. Maybe you've heard of this before. In some areas, these letters are forbidden, but hey, it's worth a try. Top dollar will typically win the bid, but the sellers get to choose which offer they like best. Including a letter can sway them towards you or at least give you the opportunity to match the highest bid. Look at the house to see what's important to the seller. Ask your agent to ask the listing agent what's important to the seller. It could be price, it could be contingencies, it could be post-occupancy. Along with the price, you're going to factor in all these other contingencies with your contract. Work with your realtor to decide what you'll ask for to start with, and dropping some requests if the market is hot. Remember to check your emotions and keep your wits about you when writing the offer. Don't fall in love with the house. Falling head over heels with the house can make you do ridiculous things like way overpaying. Plus, sometimes even an excellent offer may not be accepted. Don't assume a rejection is an insult. The sellers might just dislike some of your contingencies or holding out for a better offer. So don't assume it's over until it's over. Plus, a lot of properties are coming back to market, so you never know. If your offer is accepted, we're going to go to the next step. So check out my next video and don't forget to subscribe so you don't miss anything.